Unit trust, one of the most confusing investment out there.
Because there's so many choices, right? But if you can find the right one, it can be the most rewarding investment decision that you can make.
What's up guys, this is the second part of the video. If you haven't checked out the first part, pause this video and click the link to watch the first part first. Then you can find out how to select a suitable fund for yourself before we learn how to read a fund fact sheet step by step here. But I will still read the original fund fact sheet, which can be found by just clicking the link to the fund fact sheet. It is one of the most important documents that you have to read when assessing a fund to see whether is it suitable or not. A fund fact sheet contains the overview information related to a fund. It is released monthly to provide concise details and performance of the fund for the easy reference of investors. Although different fund houses may have a fund fact sheet that looks different, but generally they all contain similar information. So let's take a look at this particular fund fact sheet. At a glance, you can see there's the name of the fund management company and the name of the fund. Then there's the fund objective there. For this one, the objective is to provide unit holders with enhanced capital growth through a focused investment approach in certain preferred sectors. The common words that you will see in the fund objective section is usually to provide capital growth or to provide income for the investors. Funds with capital growth as objective are commonly investing in the stock market and are usually more aggressive. But for those that seek to provide income for their investor, usually invest in the bond market and have relatively lower risk. Then there is a section that tells who is this fund suitable for. In this case, they provided 3 guidelines. Those who seek to achieve maximum capital growth by investing in securities of companies under certain preferred industry sector. Securities simply is a fancy word for stocks. Number 2, it is for investors who prefer a medium to long-term investment horizon to achieve potentially strong growth prospects. Basically, they are trying to tell you that you're gonna get capital gains from this. And your time horizon should be medium to long term. Then the third point, are willing to accept medium to high risk tolerance in order to obtain higher growth of capital. In this point, they are trying to tell you that the risk is high. See? Quite clear, right? Plain English. Very simple. Okay lah, there are some investment lingo there. But you know, they are just using fancy words for normal stuff. By the way, you may be wondering, how are they going to select the preferred industry sector? Now, if you want to know, then the best way is actually to read the fund prospectus, where you can find out a little bit more information. And if you do not know what's a fund prospectus, you can go and check out one of our previous videos where we talked about what is unit trust. We'll attach the link below here as well. Based on those 3 points, you should know that the fund is high risk in nature and the focus is capital growth. The next section is the manager's comments, and sometimes they will call it a market review. Basically, it's a section where the fund manager gives his opinion on the overview of the market. In this particular fund fact sheet, the manager points out that he believes that the worst is over for Malaysia due to the rapid vaccination progress. Therefore, he is optimistic towards the outlook of risky assets, and he will continue to increase his exposure in tourism and leisure sector. Plain English again, right? No need to explain. Having said that, actually this particular section is one of my favorite sections to read because it provides a general idea of the investment strategy or investment idea that the fund manager have in mind. It also helps me to develop my own personal stock investment ideas as well. So for those of you who are interested in investing in the stock market, you can learn a thing or two from the market overview comments. Then there is a section that talks about the investment strategy of the fund. Now, here is where they will point out the strategy that's employed by the fund manager. For this particular fund, their investment in the stock market will be in between 70% to 95% under normal market conditions. The next point, they also mention that when they find a particular sector that could outperform, they may invest 40% up to 70% of their funds into this particular sector. This means that the fund is less likely to diversify. In terms of fixed income security, aka bonds, or liquid asset, aka cash or short-term deposit, it will make up a minimum of 5% of the fund or maximum 30% at any point in time. So what they're trying to tell you is this: under normal market condition, the money that's in the fund will be at least 70% invested in the stock market. Let's move on to the next section, the fund details. This is the part where they list down the name of the manager, the trustee, the fund category, the fund type, the launch date, the NAV, the fund size, and the total value in circulation, financial financial year end, and so on and so forth. A few things you may want to pay attention to. The first thing, the minimum initial investment, which means the minimal amount of money that you need to start with when investing in this fund. Then additional investment, which means the minimum amount to top up on your existing investment. So for this fund, you can start investing with just 1,000 ringgit. And then every month you can top up 100 ringgit for dollar cost averaging purpose. You will also find an information called the benchmark, which is the standard that this fund is judging its performance against. The fund should outperform this benchmark to be considered a performing fund. And then there's information about sales charge, which is the upfront charges when you invest in these unit trusts. For this particular fund, it is up to 6.5% depending on which channel you use to invest. Let's say you speak to a financial advisor, they can charge you up to 6.5%, but if you choose to use an online platform like FSM1, you will probably be charged less than 2%, probably 1.75 or 0% during promotion time. So, if you're charged 6.5%, this means that if you invest 1,000 ringgit roughly, you will need to pay around 65 ringgit as an upfront fee. I personally use online tools to save up on fees. But if you need help for an advisor, don't be shy lah, just pay fees, alright? And here's where I would like to take a minute to talk about our sponsor for this video, P10. When you're planning for your financial future, such as education or retirement fund, interest saving or mortgages, all these can be pretty complicated since it involves some complex calculation. Traditionally, we see people using complex tables on Excel sheet, which can really give you a pening kepala, But now, it doesn't need to be this way. I had the opportunity to try out P10, the financial AI wizard at your fingertips. They use a humanized technology approach, and it helped me to solve this complicated financial calculation with just 3 to 4 simple data input. Then tada! The answer is just right there. No more complicated formulas or spreadsheets. The best? No pening kepala. So if you're interested to learn more about P10, do check out in the link below to find out more. Another information here that's important is called the repurchase charge, or in other words, redemption charges. It is a fee that applies when you sell your units. Good thing is, most of the funds in Malaysia have no redemption charges, but do read first because you never know, right? The next information is annual fee. There are 2 fees that needs to be paid yearly. The first one, management fee, and the next is trustee fee. Why do you need to pay a fee yearly? Well, simple, because no one works for free, right? Now, how much would they charge? If you notice, the charges are actually based on the NAV, which is called net asset value. So, in this case, if the fund is not performing, the charges will be lower. But if the fund is performing well, the charges will be higher. This way, the fund managers will be incentivized to do a good job and make sure the fund performs for you. For this particular fund, the management fee is 1.5% of the NAV and the trustee fee is 0.07% of the NAV. So this means every year, a 1.57% fees will be deducted from this fund annually. The next one is redemption payment period. It tells you how long it takes to get your money back when you sell the units. And finally, the distribution policy. In this case, there's no distribution policy in place for this particular unit trust. The next important section is performance. Usually, you will see a graph with 2 lines. One is the fund's performance and another one is the benchmark performance. At a glance, it will tell you if the fund is performing above the benchmark. In this case, we can see before year 2020, this fund was often performing below the benchmark, but after 2020, it outperformed the benchmark by more than 2 times. That's a very impressive performance, right? And it's not uncommon to see this in a fund where certain years it wasn't performing and suddenly it just outperforms the benchmark. When you see such thing, usually it's because they changed the fund manager. For this particular car fund, I checked and yes, they changed the fund manager. Apparently now it's some brilliant young chap who's younger than me. Anyway, as we have mentioned, when investing in a unit trust fund, you are actually putting your money in the hands of a professional investor. So your returns is actually going to be as good as the fund manager who manages that fund. Therefore, it's very important to know who is your fund manager and is he good at doing what he does. One of the best ways to find out if the fund manager is good is to speak to people within the industry to learn more about your fund manager. The other method is to see what other funds they have managed before and the performance of those funds. Because at the end of the day, numbers don't lie. So, best check their past performance. Then the next section, the cumulative return of the fund by periods. Some fund fact sheet will also show the performance by calendar year. In this particular fund fact sheet, it shows the cumulative return, which means the total return you get from your investment over a period of time. In other words, if you invested 100,000 5 years ago into this fund, your total return will be 116.87%. So now you will be sitting on 216,870 ringgit. If the performance is by calendar year, this means they are trying to tell you what the performance of the fund was like based on a particular year, like this particular fund here. Now, performance based on calendar year tells me the performance of the fund in the context of the year, such as in 2018. We know the market was bad. So, as long as the fund did not lose much compared to the market average, that kind of tells me that the fund manager is pretty good in controlling the risk. And let's say when we look at year 2020, we know that it was a bullish year. Stock performed very, very well. So when I look at the performance for that year, if the fund manager did not perform better than market average, I'll be pretty disappointed. At the end of the day, performance based on calendar year is just trying to tell us how good is the manager in the context of the year's market condition. Now, one more important measure for us as an investor is to actually look at the annualized performance. But this is often not listed on the fund fact sheet. It is something that you have to calculate yourself. Or you can just use FSM1 to find out. This annualized return gives me a good idea in terms of compounding growth rate of the investment. For example, this particular fund here. On FSM1, it tells me that the annualized return for the past 5 years is around 15% per year. This means that if I invested in this fund for 5 years, my returns are going to be like having a 15% compounding return over the past 5 years, which is pretty fantastic. Okay, one last thing about performance. Many people will tell you that the performance haven't minus management fee yet. Well, that is not true. The performance data on the fund fact sheet has already minus off the management charges. The only thing that's not taken into account is the upfront sales charge. So you need to minus off the upfront sales charge to know your exact invested capital. Once you figure that out, then the numbers will match accordingly. Now we are almost at the end. The last part is sector allocation, which is how much is invested into each industry or sector. In this particular fact sheet, the largest sector allocation for this fund is invested into the technology sector, followed by the industrial products sector. Some other fund fact sheet will include geographical allocation, especially if they are investing in global funds like this one here. Now, for this part, if you have a good knowledge about economics, market cycle, and stock investment, and you follow closely with market news, you may be able to understand why they pick certain sectors, and you can guess the investment strategy of the fund manager. But if you have no knowledge of the market and economics or market cycle, this information here, it's pretty much meaningless to you. And the final section is the top holdings of the fund, which tells you what are the stocks or instruments they are invested in and how much they are invested in. For this particular fund, their top holdings are Genting Berhad, Tune Protect Group Berhad, CAF iCash, Malaysian Pacific Industries Berhad, and RCE Capital. The amount stated is in the percentage of the NAV. So if the NAV is 100 million, then 4.46% is invested into Genting Berhad. This means the fund is holding 4.46 million worth of Genting Berhad shares. Again, if you have no idea about how to invest in the stock market or any knowledge in economics, this information here is not meaningful to you. So personally, I think whether you want to invest in individual stock or you just want to have some knowledge in how to invest in unit trusts, learning stock investment is actually a good choice because it really helps you to understand the fund fact sheet much better. For this particular fund, we know why they invest more in Genting Berhad and Tune Protect because he already mentioned in the comment section that he is optimistic towards the tourism industry. Last but not least, the top right corner has a big number and it says fund volatility factor. In this case here is 20.6. Bracket very high. Well, to loosely translate this, it simply means that the fund could fluctuate by 20.46% at any given time. In other words, you may find yourself gaining 20.46% or losing 20.46% in fund value. So it's considered a high risk fund. Now, if you want to know more in detail how does it work, you can check out our previous video where we talk about the fund volatility factor there. Now, personally for me, since funds, my time horizon is 20 to 30 years. This risk is acceptable to me. But if I need to withdraw my money in a short period of time, like let's say within 3 years, I will actually avoid these funds. So now, there we are, a step-by-step guide on how can you interpret a fund fact sheet. Thank you very much for your patience and staying till the end. Now, the best practice for yourself is actually to open an FSM account with the link below and try to play around and see. Hopefully, you will find a suitable fund for yourself and make some money.